Hello, I'm Andy Kirk, Senior Chartered Financial Planner, and today I'm joined by Mashud Rahman, our Head of Investments, to discuss the importance of focusing on long-term performance. Mash, let's start with why it's crucial to stay focused on the long term. Can you explain?
Hi Andy. Absolutely. So staying focused on long-term investment performance is important because generally investments grow more over time. Short-term market fluctuations can be misleading, but historically, staying invested for the long term tends to yield better results compared to trying to time the market.
That makes sense. For investors, seeing a drop in value of their investments in the short term can trigger an emotional response. What advice do you have for investors and people looking to invest on this?
So managing emotions, particularly when it comes to personal finances, can be tough. If an investor sees the value of their investments drop, it's very common to feel anxious and want to get out quick. The same goes for the euphoria of seeing investments increase, but fundamentally, reacting emotionally can lead to poor decisions. Remember, markets go up and down, but over the long term, they tend to grow. Keeping that long-term view helps prevent impulsive decisions driven by short-term fluctuations, which usually results in a better outcome.
Yeah, so it's key not to let short-term fluctuations derail your strategy. Clients often ask about when it's the best time to invest or sell funds. What are the dangers of trying to time the market?
So trying to time the market, trying to buy low and sell high based on short-term predictions or short-term reactions is risky. And more often than not, it's detrimental to investment performance. If you look at the UK stock market, so the FTSE 100, over a 20-year period leading up to the 31st of March 2022, which includes the bout of volatility we saw that year, you would have achieved an annualized return of 5.6%. What generally happens when people try to time the market is they sell out when the investment has already started to fall. And they don't have that confidence to return to the market until the investment has already been rising for a little period of time. With this strategy, they tend to miss the best days when the investment turns around. So if you miss the best 10 days in our 20-year example, that 5.6% changes to just 2%. And the more of the days you miss, the worse the ending return. So if you miss the best 40 days over our 20-year period, instead of a positive return of 5.6% a year, an investor would actually be at a loss of 4% a year. And usually, the best days in the markets is often the day after a big sell-off, which is when we see a lot of those panic sells.
Yeah. Clearly, being able to retain that long-term view would help investors to avoid those panic selling scenarios, ultimately resulting in greater long-term performance. Mash, how would you say investors can avoid being swayed by short-term market news?
So it's definitely easier said than done, but I suppose the first thing is to remind yourself that objectives are long-term. So definitely avoid checking your portfolio too frequently and remembering that a couple of percent lost here and there is unlikely to impact your long-term goals. Let's say the goal behind a portfolio is to retire in 20 years' time. Seeing a small period of market volatility shouldn't cause too much panic, as in general, markets go up over time. And as long as the strategy is in a well-diversified portfolio, the impact of some volatility today is really unlikely to stop the ultimate goal of funding retirement.
That's great. Thanks, Mash. So in summary, your key takeaway message would be maintaining a long-term perspective on investment performance helps to weather market fluctuations and avoid the pitfalls of trying to time the market. Staying focused on your long-term objectives, managing emotions, and maintaining a well-thought-out investment strategy should lead to more successful outcomes over time.
Yeah, absolutely.
If you'd like to know more about investments, we have other videos in this series which you might find useful. Thank you for watching.